dollar has been consolidating, but we can clearly see that institutions such as JP Morgan and few others, they are very bullish on euro, and they're heavily bearish on dollar at the moment. As you can see on their website on JP Morgan, by September 2025, they were saying that euro USD was going to reach 1.19, and it is nearly there anyway. Then by December 2025, they're predicting that it is going to be 1.2, and by March they're predicting 1.22, which means that for a few months, like in at least 3 months or 6 months, they are very bullish on euro, and that automatically means that they are kind of bearish on the dollar also. So is it going to happen like that, or are we at a very crucial point in dollar? Can it have a turning point at the moment? Right. So we need to look at all the scenarios to be able to make good decisions on our investments, and also on trading, short term or swing term trading purposes. Remember, even if you do not trade dollar, you should still watch this analysis. You should still be aware of what is happening to dollar, because everything directly or indirectly is dependent on dollar even today, right? So I know, a lot of people talk about de-dollarization and everything, but death to the dollar and everything is that. But the truth of the matter is that it is still valid. It is still the reserve currency, and everything depends on dollar. So in this analysis, I'm going to deep dive into the dollar analysis. I've done that several times in the past as well. So this is going to be very important one. So make sure that you watch it until the end, because they are very, very information points and very important points. So I'm going to be covering Euro USD, Dollar Index, and USD JPY. Okay, and I will be reminding you what I said before, how it played out, and what are the several scenarios or possible scenarios for the coming future. So stay tuned. Welcome back to this analysis of dollar index, Euro USD and USD JPY. My name is Vic. I'm the founder of Vic Insta Capital Management. Hope you're well. So as I mentioned before in the intro, that the dollar could be reaching a very crucial point. Now, I'm not suggesting that it is going to be turning right now, but we are certainly at one of the levels where we can see some of the possibilities for a turning point. So let me first walk you through what has been happening here. Okay, if you remember, if you have been following my analysis for quite some time, for at least a couple of years, I've been bullish on dollar, right? And this is the analysis that I posted on May 12th, 2022. It is already there. It is there in my Telegram channel as well. So if you are there in my Telegram channel here, you can just simply come here and post DXY long term, and you should be able to find this analysis which I posted here on September 25, 2022. And even before that, I've been covering all of this. And this has been working really, really well. And here I provided multi-year analysis. And now today's analysis is a kind of follow up to that. Similarly, I also posted about Euro USD analysis, which was posted on November 6, 2022, and it has played out brilliantly well. So you see, the point here is that most of these technical analysis, which are higher time analysis, they actually work, and irrespective of the news, irrespective of the fundamentals, they keep on working, right? To some degrees, there is always a possibility that they might not reach exactly the same level, but in majority of the cases, they seem to work. So let's see what has been going on. Besides this, right? I also posted a USD JPY analysis, which I'll show you in a bit. Okay, but before we go any there, let's look at dollar, right? What is going on. I'm looking at DXY, and I'm using this particular feed, so it could be different to what you are looking at, but I'm using a TVC feed here, dollar index, and I'm on monthly time frame. Now, what I mentioned in the previous analysis, that we had this W pattern forming, right? Which was multi-year W pattern, and when W pattern completes, the market falls. Okay, this is the reason why I was long here, very bullish here, and then I was bearish from here. Why? Because the W pattern, when it is forming, it is bullish, but when it completes, it is bearish, and this is the reason. This is the W pattern I was talking about. So this W pattern was there. Okay, this was our target zone. There were three targets zones that I gave. Two of them have been completed. So this was basically a multi-year consolidation which was there, and everybody was bearish around here, which was 2020, right? Everybody was saying that the market is going to like tank, the dollar is dead and everything, right? They keep on saying all these things, but dollar has been proving them wrong again and again and again. And the best way to check it is by looking at the charts themselves, right? So here, when it was around like 90, below 90 or something, everybody was bearish on the dollar, but we were bullish. Why? Because we saw this multi-year W pattern forming and reaching this particular level around 110, and possibly higher than that to 113 point something. And you see what happened. If I play this exactly where it happened, right? Market reached the second target 113, fell from there, it came back down into this consolidation here, and early this on in Feb 2025 it tested that lower zone once again, because this is acting as resistance. So where it is right now, it is sitting right at the 50% of this multi-year consolidation, right? So what happens usually, let me show you what the scenario is like, technical analysis wise. When you have some kind of consolidation on any time frame, you have ups and downs, and once the market breaks out, right, at some point in time it usually comes to 50% of this consolidation, and that's exactly where we are sitting right now. Okay, so this level here where we are right now around 97.7, that is half of this level. I'll show you that on a chart in a bit if it is confusing you, right? So this is a very important level. There is another important level just below this. So what I can expect is that market can be bullish from here, or if this level, current level where I'm sitting at the moment, right in around this area, it may not be exactly 97.7. There can be some tolerance required because we are looking at monthly time frame here. Okay, but if this does not hold itself, then the market can come down to another level at the bottom and then rise up. There are certain things which are at the play. Okay, and it may happen just because the patterns, the higher time frame patterns, seem to work all the time. It does not matter what is happening right now. If you're thinking that the interest rates were were getting higher, no, if you go and check, interest rates were actually getting cut when this dollar was rising. So it has nothing to do with that. It's basically mostly the patterns which are evolving. And this is the W pattern that I showed you earlier on. It fell down, it went up, created another W pattern. Now it has come back down, and where it is right now, it's the half of this range which was formed several years ago. This is the half of it. Okay, so right now this is looking like a very good level to look for a long opportunity, or to look for maybe like a possibility of a opportunity. Okay, and this is the analysis that I have been following. So there have been twice, two times they said dollar is dead, right? And every time when they said this, and dollar has proved them wrong. This was the first time when they said dollar is dead. It rose really, really high. It became parabolic. Okay. Then around this level here, they said this was around which level was it? Around 100, slightly higher than 100. They said dollar is dead. Okay, around this level. I've been recording all of that. The market went up right where into our zone, which I presented in 2022. It right went into there, it became resistance, it came down. And right now, where we are standing exactly at the 50%, which can also act as good support. And you will notice, if I just hide this entire thing, you will notice what is going on here. Let me go to the weekly time frame. On the weekly time frame, it has been able to, it is basically trying. I'm not saying that this is the right signal right now to go long, but it has been able to bounce up and then came here, bounce up, and now it has been able to collect the liquidity, create a bear breakout, and now it is kind of forming a base around here. So if it breaks out of this range that we have, then we can look for bullish momentum, and it can continue to go even higher than that. And over the period of several months or maybe years, it can go even much higher if the market continues to target or challenge some of the levels. For example, let me show you another one. This is what I presented in previous analysis, which I posted 2 years ago as well. You see, if I just focus on one pattern at a time, this is the W pattern I was talking about. Fell down, W pattern fell down. Now you see what is happening here is, let me take a different color. This is nothing but a kind of M pattern forming. And this has completed here. However, there is another level just below this where it can rise from. Right, I'll show you that level in a bit. Okay, and if it continues to rise from where it is or from the level below, it can challenge the previous high around 112, and if it challenges the previous high even higher than that, 116, then it can come and try to challenge 120. And if that is also gone, you will notice that the market is doing nothing but a bigger W pattern, and it can take all the way to 140 or so. Now I know that a lot of people will not actually will agree to this, but they never agreed to this part as well when I posted about it, and they never agreed about this part when I posted about this. So you see, it has just been working, right? And it does not matter what you think right now in short amount of time, right in this period, this point in time. Over long term, right, this picture is still playing out until substantially it falls down and challenges the lower of 89. I will still stick to this analysis. Okay, so what is that level that I was talking about? If the current level does not hold, then what can happen? Take the fib, draw from here all the way to this level, and you will notice that we are around 61.8 here. Okay, and if I draw all the way from here to here, we are sitting around 61.8. So if the market does not actually start to rise from here, then let me give you an approximate level which is going to be around 94.6, or actually if I take it from here, it is still around 94.6, 94.8, around that area. So this level and the current level, which is going to be, let me put another line here, which is 98.9, so 99 approximately. So 99 is an important level, and 94.6 is also going to be important level. One of these levels can give us a good turning point on dollar, and my target here is 127, and then followed by that, if the market continues to go even higher, it's going to be around 140. So I'll keep you updated when the time comes. Okay, as if the market starts to challenge some of these levels, right? This is what it is. Okay, so this was the dollar. Now let me show you what happened on euro USD, because you see euro USD is inverse of dollar. Euro USD I posted November 2022, and here I posted on May 12, 2022. Okay, so there is a difference of time in there, and this is what I said. There was a long-term M pattern completing on Euro USD, and I said from here, from where it was there, right, 0.9916, because it was around a parity level as well, 1.6, and then we had this M pattern, and this was in an FCP zone. I said the market could bounce from here. If it was not going to bounce from here, then it was going to fall to one of these levels at the bottom here, one of these levels here, and then bounce. And my target one will be 1.0, target two will be 1.125, target three will be 1.20. You see, I've already have taken that in account. That 1.20 level which JP Morgan is talking about, it is already there. So if I play this, see what happened. The market has been able to hit level number one, tried again, and now it is very close to the level target three that I gave. So target one was hit, target two was hit, target three is about to get hit. So it is still possible that market may reach 1.20. So the answer to the question, and the point that JP Morgan and other people are saying, that the market could actually reach 1.2, that is still a possibility. However, you have to consider that dollar is sitting on an intermediate level here as well right now, and if it starts to run up, then it may not reach 1.20. So you have to be very, very careful here, because we are an intermediate turning point on the dollar as well. Okay, now let me show you what I said about USD JPY. Okay, because that is also very, very important. On USD JPY, actually before that, let me show you DXY, right, another chart that I prepared for you. So now what I'm going to do is, actually, because the market is right now in an FCP zone right now, kind of support zone that you may call it, right? In our methodology, we use different techniques. We use Fibonacci based techniques to find these zones. Okay, on the weekly time frame, the market is getting squashed. It's basically it's getting squeezed here into this triangular sort of pattern, and this is usually a breakout pattern. So if the market continues to break out to the upside, and as I said before, if it is able to give us confirmation above 99 area, then it's a good possibility that market will run up, dollar will go up. And if that happens, then obviously euro USD may not reach 1.00. Again, I'm reminding you that this is at a crucial point, and if that does not work out, then another crucial point is going to be this one. And if that does not work out, then we have another one called around 92.7. Okay. Now let's me go to the USD JPY because I posted about that as well. This one was given several months ago, actually. Again, similar to what I posted about on other charts. See, this is what is happening right now. Okay, if you look at the monthly time frame or even higher time frame, that there is a big W pattern forming, huge W pattern, which is like decades worth of work, right? So here, this is the W pattern, and this is how it is forming, and then we have another W pattern here in the middle of it. So this is what I posted several years ago, saying several months ago, saying that the market was reaching a resistance level if the market breaks through this. And you see there is a W pattern here at a resistance level of 1.58. Let me show you this. So this is the W pattern, and this was the resistance level, previous resistance level. So when W pattern completes, the market falls, and we had a resistance. So hence the market fell down, irrespective of the news anyway, because again, higher time frame patterns are running the market anyway. Okay, so what is happening? Market did fall as we were expecting, but it has not been able to fall much. It is simply consolidating. Why is it consolidating? Because it can give the strength to DXY again. Why? Because if the market goes above this resistance area, which I pointed out here, if it goes above this, performs a retest or any kind of confirmation and picks up momentum, it can rise higher. So something is telling me that the market can actually pick up momentum, and if the market continues to go higher, there are several gaps which were left in 1985, 1984. All of these gaps can be the target, but it may reach around 220 level or so. USD JPY can reach there as well. Now, I'm not sure what will, like in terms of fundamentals, what can be the catalyst for this, but you will see that usually when these patterns complete, the catalysts come automatically, like they present themselves automatically. So I'm more um, I'm more into like technical analysis, and then I realize that most of the times news follows automatically. It's just like other way around. Whereas most of the people, what they say is like wherever the news is there on daily basis, they see the price movement, but they fail to see the overall picture in the market. So I'm giving you the overall picture here, and I believe I posted this USD JPY here as well, long term. Where did I post it? I believe this was posted. Not there. It's somewhere around here. But I posted about this on my either LinkedIn profile or somewhere there, but it was there, right? Most probably it was on LinkedIn profile. If I find it, I'll put a link to that in the description of this video. So overall point, just to revise very quickly, watch out USD JPY, because it is simply coiling at the moment. It is simply trying to consolidate, and if it breaks through this range, then it can present a lot of strength to DXY. And if that happens, Euro USD can fall, DXY can go up, and that can impact a lot of things in the entire market. Because if the dollar starts to gain strength, your S&P 500, Nasdaq, your gold, your commodities, like the whole thing will start to have a different, different turning points and different technical analysis and different perspective. So hopefully you found this analysis useful, right? Make sure that you go through this few times to understand each and every point. What you can also do is pause this video, go to the chart and see it for yourself, right? What I've drawn on my chart, it's very simple to draw for yourself, right? And see for yourself, because charts never lie. I always say that people will lie, data may lie, because data is prepared by people most of the time, right? They will never give you the access to the right systems. So they present the data, they present the report, which means that that can be lied about as well. But when you look at the charts cannot lie, because you cannot tell me that this is actually a bearish candle. No, this is bullish candle, the market is going up, right? You cannot lie. So you have to see and believe in the charts, because charts present the previous data and the present data. That is the only thing that you have to be able to make good decisions on, like, the future good decisions, because that's the only thing that you have got, right? So charts never lie, people do. Remember that. You can do this analysis yourself as well. And if you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and share it with other traders and trading communities, because this is going to help them and it is going to help me as well. It is going to motivate me as well to come up with this analysis for free and on my social media channels for you. I'll see you in the next one. Have a great trading time, and good luck. Thank you for watching. Find and follow us on these social media channels.